Hey, everybody, welcome to another episode of the Under the Hood podcast hosted by Stallion Capital. Today on the show, we have Matt Reiner, who is the managing partner at Capital Investment Advisor. He's also the host of the Bridging the Gap podcast, author of Dr. Cole Cash, Will See You Now, and the visionary behind The Circle, which is a newsletter for passionate and busy wealth management peers who receive actionable tips 3 times per week. Matt, how you doing?
I'm doing great, Tim. Thanks for having me. Looking forward to this conversation.
Of course. No, I'm looking forward to getting to know a little bit more about you. And obviously, you are very focused on the financial advisor space. And we talked a little bit about some topics I'm really excited to jump into. But before that, let's go ahead and hear a bit more about you, a bit more about your story so that people can get to know you.
Yeah, no, I think I always love to start with the journey. It's been a fun journey. So, I mean, my background, I grew up in the wealth management space. My dad started our firm 28 years ago, Capital Investment Advisors, and I was there watching him kind of grow it. And, I spent a lot of time in the office and around the people at the beginning. And, my journey started, coming to work with him after college. And I have an older brother who was working with him as well. And so I was really the third wheel trying to figure out, what my value was. And early on, I actually dealt with a ton of imposter syndrome, which is an idea around just kind of not feeling worthy and what your value is, because Dad and my brother had done a great job building the firm. And I was trying to figure out, where do I, add some unique value? And about 9 years ago, we decided to start a technology company, and I within our firm, and I took that off and ran with that, and that's where I really found my passion. I found this entrepreneurship bug, leadership bug, this technology, product management, ability to connect with people outside of wealth management and learn and bring it back into wealth management and fuse these two passions and interests together. And I enjoyed it. And, last year, was probably the best bittersweet moment for me of learning, is that we had to close that business down. I lost $7 million of investors' monies because our venture failed. And it was an amazing venture. I unfortunately, it didn't work out. And but it was the best learning experience that I could have, and I was able to merge back into our organization and found my passion of what I enjoy and where I can add value to this firm. And since then, have been doing just that within Capital Investment Advisors, leading our transformation division, which manages innovation technology, along with some strategic growth areas. So, the journey has always been in wealth management. I knew that. I knew I was going to be a wealth manager or in the industry, or be an athlete. And my athlete dreams were shattered really early on in my athletic career. But I knew that this industry was somewhere I wanted to be, because I saw my dad do it and I always looked up to him. So it's been a journey, and I'm just excited to be able to have an impact, hopefully, on some people's futures with some of the insights and knowledge that I get. And I've really dove into, within our circle and within our books, all around behavioral psychology. I feel that there's a growing demand and a growing passion around the psychology of the humans and our cognitive biases that are derived from our early childhood through now this connected world we're in, that can impact our investing decisions. And the more we can understand that and become aware of that, the better we can hone that, so that we make better decisions, both professionally, investing, and across the board. And so I've spent a ton of time diving into that. I learned that during the technology days of how do you get people to use your product? How do you get people to be attracted to your product? And so I've continued to bring that over as well.
Behavioral psychology, I like that a lot. And I want to specifically tie that into if it is relevant at all. You said you had a venture, you were running it for some years, it failed, you kind of merged back into the company. What were some of the key takeaways from that venture? Does it have anything to do with behavioral psychology? But before you jump into that, kind of give us the overview of behavioral psychology as you see it.
Yeah, I think behavioral psychology is just, I think that the best way to explain it is that the theory that we learn in school is all about economic theory. And economic theory says that we are rational agents, as they say, and meaning that we make decisions to meet the top value, the highest value that we can get. right? Given all the data points that we know. But time and time again, we see that humans don't make those decisions. And we always wondered why that was. And there was some guys out there, Daniel Kahneman and Tversky and Richard Thaler, who wrote a book called Nudge, and Kahneman wrote a book called Thinking Fast and Slow. They started to dig into this. Why are people not making the most rational decision when all the data says that they should and they still don't? And what was found in all that research was it's emotions, right? I always liken it to an equation, right? If you can say, knowledge times, work ethic, that gets you your output. But if you put in variable Z, which is emotions, it automatically, all of that goes to zero. All that becomes null and void because emotions then ultimately drive what we do. Yeah. And you think about the world we're in, it's more connected than ever before. I can get information in a split second pushed to my phone. And that impact now creates all of this consumption that comes in that I have to then delineate and make the best decision. And now I have an overwhelming of decisions, which then causes fatigue. And so that was super interesting. But ultimately, what behavioral psychology is making irrational decisions based on emotions. And how do we then understand these, what we call cognitive biases that spur us to hold us from making rational decisions? And knowing that we're not making rational decisions, how can we then work with clients and peers to better navigate that decision-making process with the understanding that these are the cognitive biases, and how do we overcome them so that we're not using rational theory and rational thought and rational sales to help convince someone that's not going to make a rational decision? It just seems that it's a little bit backwards in my mind, and that's where I think behavioral psychology is so interesting.
Yeah, no, absolutely. A lot of people, I've heard a couple of speakers kind of touch on this point a little bit. And one of the things that they'll always say is that, we make emotional decisions and then we justify it with logic. And I think that's a prime, even the people who think they're being logical in their decision making, it's just they had a quick emotional decision and then they were quick to justify it with logic so that they appear logical. But most of us, all of us, are making emotional decisions primarily. And so you mentioned cognitive biases. Talk to us a little bit about some of the common cognitive biases that come up for us in our day-to-day life, and then specifically with investment decisions.
Yeah, so I think that there's a few, right? You think about anchoring bias, right? Anchoring bias is, something where we get anchored to a point of view that is our first one that we hear, or a number. And so, for instance, if you can think about this like in stock splits, right? So if a stock is trading at $100 a share and it does a 10-for-1 split, and then it goes to $10 a share, people have a hard time understanding that the value of that company is still the same. They think it's now more valuable at $10 than it was at $100, and they're more willing to buy it at $10. Or some people are like, that's not as good of a stock because it's only $10 now, and so they don't buy it. Or they buy so much more of it that then it pushes the price up, but they weren't willing to buy it at 100 because they anchor to a high value of 100, but now they see it at 10 and they say that's a deal. And so we don't understand that it's actually the same, and it's hard for us to comprehend. How is it the same and it's trading at $10? And so there's this anchoring to this number that the value is $100 a share, no matter how many shares are outstanding. And so that is an issue, right? Then you have an endowment effect, right? Endowment effect means that we value what we own more than that we do not own. And there's a great study by Dan Ariely around this that I use in many of my presentations. Is that he went and did a study at a Duke, North Carolina basketball game. So these basketball games are huge, and people camp out for tickets for it, and so it's a big deal. And so what he did is he went and asked the people. Some people get tickets and some people don't. Everybody camps out, but only some people get them. And so he went and asked the people that had the tickets how much they were willing to pay or sell those tickets for. And these are $50 tickets, or student section tickets, and the ones that had the tickets were willing to pay for it or sell them for about in the thousands, like $1,500 or $1,200 or something like that. Yet then he went and asked the people that didn't get it, but they still camped out, what they were willing to pay for the tickets. And they're like, I'd probably pay like $250 or $300. And that shows this different valuation aspect of it, of what you perceive the value to be. And value is in the eyes of the holder. It's all perception. And so what this means for investors is that when you think about, there's this, when you're holding a stock, whether it's a good stock or a bad stock, it's harder to convince someone to sell it no matter the data that you're putting, because they value it higher than what it is, right? We value that. Or if I've been given it as like an inheritance, like I value that because there's so many other tentacles to that one. And so knowing that helps us understand, not just saying this is why we should sell it, but that you have to prove without a burden of doubt that value that they have their belief in is not right, which is really hard to convince, right? And so that's one of them. And then you just have to think, loss hurts 2x more than gains, and so losses are always more difficult, and that's a cognitive bias. Even if it's the same amount, like a gain of $5 doesn't feel as good as a loss of as bad of a loss of $5 feels. It's 2x that, and we know that inherently. But what do we do with that information? And I think that that's the point of it, is understanding why these biases are here, what's going on in the human brain, so then we can help our clients navigate that with an understanding, as opposed to just presenting all of this information to them when we know that that's not going to work, because that's not how you overcome cognitive biases. You've got to go and got to almost be a little bit more therapeutic in a sense to help them navigate that. And so, those are just some of the ones that are really interesting. There's a whole, lineage. I mean, there's just an abundance of biases. We're humans, and humans are naturally complex, and emotions are complex.
Yeah, no, absolutely. I guess one other that kind of popped in my head that I learned about in college and it stuck with me: confirmation bias. Would that count as a cognitive bias?
Yes,
Yeah,
that's exactly right. Yeah. And that's what we're doing. That's what every human does when they go against rational thought. Then they come in and they confirm. They give a confirmation because they go find information of why they're doing that, and they then build in this inherent. So you're basically supporting a bias with another bias, and it's somewhat like a kind of like a vicious little circle.
Yeah, no, absolutely. And so we got the anchoring bias. Was it the endowment bias? Is that what
Endowment effect?
Endowment effect. And then loss hurts 2x more than gains. And so talk about that anchoring bias, that initial perception. When we're looking, or when you guys are working with clients and when people are looking at potential investment opportunities, of course, price comes into play, but how does news kind of work into that and kind of social proof of the investment, if you will? Talk to us a bit about that.
Yeah. That's a really great question. I think that there's a lot to that. And I think that that's why these biases have become more prevalent over time, because of the connection and the speed of information. And so you think about anchoring and you say, well, someone sees a headline about Europe being a mess. Right? Europe being a mess. And it just, they consistently see this in their feed and Facebook and everything. And they see it on a headline. They see it in the Wall Street Journal. They see it on CNBC. Right from there, they're anchored that says Europe is a bad area. No matter what you do to convince them, they are now anchored that Europe is bad. And if you want to diversify a portfolio into European equities, developed or emerging, you're done. You're toast. Yeah. They're anchored that Europe is bad. Even though rational thought says you need a diversified portfolio, you still need European stocks. Not all are bad. You're anchored to this viewpoint that Europe is bad. And then you take that a step further. Now all they're seeing is confirmation that Europe is bad. So now your chips are being stacked harder and harder against you, because they're just continuing to confirm themselves that Europe is bad, because all they now view is they only look for information that supports that. If they find any information that doesn't support that, they'll disregard it. So they're only finding information that says it's bad, which then builds up this narrative in their head that Europe is bad. And they won't then, so that makes it hard to convince them to diversify their portfolio. You see it with a lot of the ESG and such of that nature, that people won't touch companies, even though if you tell them that's only like 1%, it's just that's way too much. And I think I'm not saying it's a bad thing. I'm just saying that is a driver of investment decisions, and sometimes it works and sometimes it doesn't. But it's not built into the traditional way of economic reality that has been taught to us, because it's just not true. We don't make decisions in that way, yet we all think of investing in economics in that way.
Yeah, no, absolutely. And specifically with that endowment, not bias, endowment. Give me one more time. What was it?
The endowment effect.
The endowment effect. I knew it was double E there. Specifically with the endowment effect, I think of kind of my time in real estate. Used to kind of be a realtor, tried some wholesaling there for a bit, and you'll see people who perceive the value of their home to be like $1 million or 1.5 million just because they have so much emotion tied to that home. They raised their kids in that home. They grew up, it was the first home they bought with their spouse, and now their spouse has passed away. And, maybe it's back in taxes 30K and actually worth $400,000, but they will not let go of it. And you're on the outside looking in saying, this is so irrational. Like the comps don't match. It's in horrible condition. How can I talk to this person? So you mentioned earlier about overcoming these cognitive biases with a kind of therapeutic model. What does that look like when you're actually working with clients or just people in our daily lives? Because it seems like these biases are prevalent throughout life in general. So what does that therapeutic process look like?
Yeah, I think that, I see it with real estate all the time. Houses is like one of the biggest ones. Everybody thinks their house is worth more than another. And, you think about just like employees and great. I think it's phenomenal. Everybody believes that their value to an organization is greater than the organization. There's just an inherent bias. And I think that that's fine, right? That's what makes the world, go round, is that you have supply demand and you try to find this equilibrium, but you have to be cognizant. If you aren't aware that you're falling into a bias, it's going to be hard for you to ever negotiate and have an open mind. And I think that then becomes the challenge. And so when you think about how do you handle this, I've seen from what I've researched and studied is that, and I've done with our own clients, is you start by connecting. It starts with building trust in a relationship. Trust in a relationship allows for a deeper belief that you're not telling me I'm wrong because you want to sell me something. You're telling me it's wrong because you truly believe that it's in the best interest of me. But you've got to get that depth in relationship. And I know a lot of advisors say they have it, and a lot of clients may say it is, but I'd be prone to say that a lot of that is built on performance. And when the markets are good, the depth is good. When the markets are bad, the depth is bad. And this is saying that this is true like a relationship, how you build true relationships with friends and family. But the most important part is it's about asking great questions. It's a matter of you've got to overcome these biases. It's not convincing. It's not saying and presenting. It's asking. That is the key to overcoming biases, because once you help them see it themselves, it's not a quick fix. You got to just consistently ask questions, not trying to prove them wrong or prove you're right, but to help them come to an understanding of what's holding them back truly and honestly, so that they can then have a clear image. Sometimes people just want to be heard, and sometimes find that be knowing that there's like a support system around and come to the conclusion themselves, and they just want to be in a comfortable area to admit that they're scared of something. And once they admit that, it's like this burden and this relief that comes off. And I remember this when I was building our company, our startup, and our technology business. For the first 4 or 5 years, it was intense. I mean, it was intense the whole time, but I was running. I identified it later on. I was running from failure. I didn't want to fail. I couldn't fail. I'm a perfectionist at heart. I always say I'm a recovering perfectionist. I didn't want to fail. And so I was running so hard from that, which then led to me making decisions that was like, I became a micromanager. I became like I was the bottleneck to everything. I wasn't able to give up control. I wasn't able to delegate because I didn't want to fail. And the only way I could help to ensure that was I had to have control. Once I realized that through self-awareness and through talking to others and reading and everything of that nature, then I said, you know what? Failure is okay. I'm putting failure on the table as a likely or a potential and a high potential outcome because of the risk of what we're doing. It's just a high risk thing. And once I got comfortable with that and I came to that on my own, nobody told me, when everybody told me, Matt, you have to accept failure because this is it. I said, no, I'm not going to fail. Once I came to that conclusion myself and I put it on the table, a weight got lifted off of my shoulders. I felt this sense of like understanding and calm. I saw things with a clear view. I delegated better. I became a better leader, a better manager. I gave others opportunities and controls, and our business did exceptionally better. Now, it was a little bit too late. There's a lot of decisions made that were a little bit too late, and that's why it failed, because you got to have some luck too. And why I share that is because coming to your own conclusions gives you that power to then see and make the right rational decision over time. And so to help overcome this is be really great at asking questions, helping them see the challenge that they're facing. Like, does this make sense? And doing it with the right intention will then lead them to seeing it themselves. And it takes time. But just knowing that you're supportive and you're there, not to like be like, hey, I told you so. That doesn't do anybody good. If they feel that, they're never going to open up to it, and they're never going to overcome their own bias. And I think that's really the key of it: depth of relationship, a comfortable environment for them to be vulnerable in, and that comes by asking really, really great questions.
Yeah, no, I like that a lot. I think asking great questions, showing that you're listening, showing that you're not judging them, seems like, pro tips for building trust in any relationship. And then specifically on the client side, when you're in a professional setting. I am curious though, it seems like you have to have done some of the work yourself to be able to be aware enough to ask great questions. Maybe that's wrong, but it does seem that way on the outside looking in. And so I'm curious, what type of questions you were asking yourself to come to some of that self-awareness that you did when you were running that company, and today, what type of questions do you ask yourself to guard against some of the cognitive biases that are there?
It's a pretty deep question. And I think, I remember the moment when I said I needed to make a change personally when we were building our technology business. I was sitting in my car at the office in the garage, and I didn't want to go into the office. And the reason is I had three of my key people in my organization had quit over a span of like 2.5 weeks. Oof. My head of technology, my director of marketing, and another developer. And I don't know technology. I didn't know how to develop. I had to learn all that. And the core product was technology. You needed developers and you needed marketers. And they all quit. And I remember sitting there not wanting to go into the office. And at that point, I said, something has to change. Like, there's something wrong. And I can't put the blame anymore on others. It's got to be internal. And I don't know if it was that. I mean, that specific day. I mean, I'm a constant learner. I'm very curious, and I constantly am. And that point going forward, I was like, I want to learn more about me and go deep into how to build something hard and how to overcome psychological challenges, and like, what is it that I'm doing and how am I thinking that I'm not comfortable. And I remember the concept of, and so I started reading a lot more, and I got back into reading. I started doing books on tape, and then started to get back into books, and started talking. I became vulnerable as well. I was just like, guys, and everybody, like, I don't know what I'm doing. And I opened up to people. And I remember reading a book called Reboot. It's over on my bookshelf here. Jerry Colonna. He's a private equity guy or VC back guy for a while, and then he got into this like mindfulness thing. And when he started talking about mindfulness, like, I was like, wow, that's super interesting. And I went down a rabbit hole there. And he's the one that taught me this idea about putting failure on the table. And when I was really able to come to that, I found that was something really powerful to me. And so, when I tell people how did I get good at questioning myself and my biases, is I stay constantly curious, and I constantly learn about other things, and not everything hits or resonates, and some does. And I've came to the realization that through self-awareness and mindfulness and all of that I am a perfectionist, and that was driving a lot of my issues. And there is no perfection, there is no end game, there is no finish line, and I had to fall in love with the process and be okay with losing and failing. And we grew up in a world, my generation and the generations now, after me, is that we didn't really fail. Our parents were there for us. And I think I give a lot of credit to those that did fail. And I think that they have a skill set that a lot of us, and I was very fortunate as a kid. I was extremely fortunate. Both my parents were super supportive. Both my parents were around a lot. I didn't know, we didn't have a lot of money then, but it didn't really feel that. It didn't matter. They were just there, and they never wanted me to fail, and right or wrong. And I had to go through a lot of that. So that was a starting point. And there's a lot of different aspects, but I would say to anybody that's wanting to get better at this, individually or professionally, release your curiosity. It doesn't matter what it is, and just go down those rabbit holes, and you'll start learning. And for me, I fall into these traps all the time. Still, you always will. Like, we are just human. But I'm able to analyze it, and I say that you're defined in the present. And so I take the new information that I have, and I try to implement a process or a structure or some habits around helping to not let that happen again. And then I go forward, and I get a little bit better after every time it happens. And so it's not a matter of not falling prey to the cognitive biases. It's just a matter of being aware of them in both conversation and in your own daily day, and trying to get better. There's no clear answer to that. It's just a matter of curiosity and falling in love with the process. And I freaking love the process.
Yeah. Yeah, no, I like that word awareness, because it sounds like there's a lot of awareness, acceptance of reality, not trying to run from reality. Like, hey, failure is a possibility. And not only is it a possibility, it's a high possibility because I'm doing something very risky. And I'm aware of the fact that I've been a perfectionist in the past, and that's kind of conflicting with me right now in my emotions. And so now the question of what systems, what processes, what habits, who can you surround yourself with? What can you surround yourself with to really help yourself along that process? I like that line of thinking. And I love that it starts with awareness and acceptance, because those are two very simple, but also intangible things. Like, it's a process of always becoming more aware, always learning to accept reality more. So I like that process.
It's simple to understand. It's hard to do. And yes. I'm still learning it as well. And I think that's why, again, you have to be a lifelong learner. And you have to be vulnerable to accept this. I wasn't vulnerable at first because I thought that exposing this would be a weakness. Was it professional? Was it like part of my professional, am I able to tell people that I don't know? Or am I able to tell people that, I have these challenges that I'm trying to overcome? And when you do, you realize that everybody else is having them. And I've found that the most successful people that I know are they're vulnerable. They're not going to like open up and weep all the time and tell you about their, long love issues that they have, or, relationship issues, but they're vulnerable, and that's relatable. That's relatable. And we talked about it earlier. If you want to help others do this, you've got to create this environment of people being able to relate to you and feeling comfortable. If not, then it's just, we will put up our shield, we'll put up our Instagram view, and you'll only see the best of my life, and you'll never know what really is happening in my world. And it'll look like I'm living the best life, but in reality, I'm struggling deep down with this issue, and you'll never expose it. And to be an advisor, in my opinion, you've got to expose that. You've got to go below the surface. It's like an iceberg. They're only going to tell you, if you ask them what their goals are, they're going to tell you this one goal. If you don't ask why and go deeper on that, you're never going to know why what is the purpose of that goal? What is the purpose that this person has for wanting to save $1 million or to do X, Y, and Z? Why do they want their kids to go to college? Everybody just assumes, well, it's because they want them to have a good education and have a good job. But why? What's the purpose? What's the purpose to them in terms of what their legacy is? And if you can go down deeper, you create this environment that then allows you to navigate all these kind of biases together. But it's all so simple for me to talk about. Yeah. It's simple to understand. Everybody's like, yeah, of course. And we'll all say, there's another book I was reading, like, we'll all say, oh, we already do that. And we'll like kind of think back, but we don't remember the past, anything close to how it actually ended up. We just have this illusions. There's all these illusions. And so what I say is just adopt being a lifelong learner. Be curious, and you're going to be a better person, better partner, and a better advisor and a better investor, I believe, in your journey.
Yeah. So it sounds like there's not any specific line of questioning, like, hey, you're looking at this this stock or this alternative investment or this situation in life. Here are the questions. It's more about, hey, take your personal situation, be curious in it, become aware, and start to ask yourself questions that lead to answers that are unique to each individual. So it's hard to get to any subset of questions because each situation is unique.
Yeah, I think that that's what makes this so difficult. It's not like here's your script to get people through it, right? Because your script is understanding the bias that they're falling prey to, and then helping them navigate that through, helping them ask, well, why? You were talking about the house, for instance, right? Why do you value that? Why do you think that the value of the house is this? If you know that the comps are not in line, they're going to say, well, because my neighbor Joe down the street sold for X. And he's like, well, are you sure? What did they sell for? What was it listed for? And then you just keep asking these questions. And they start then going, well, maybe I don't know then. And maybe that isn't right. Like maybe I should go look. And then they go find it. But some people go and be like, no, these are the comps. This is what you said Joe sold this house for $1 million. No, he really sold it for 500,000. Here, I show you. That is proving. That's not helping them come to the conclusion themselves. And so it is a different route, but it's a lot of like the whys. Well, why? Well, tell me more. Tell me more. And as they start talking, they start to like break down their own issues over the conversation. And that creates this like light bulb moment that's more impactful than any light bulb moment you can show via a chart or via a data point.
Yeah. No, absolutely. That was the one thing that I just did not understand about life for the longest time. I was always trying to just kind of say my point and just go direct at people and like, why aren't you getting this? I don't understand. This is so clearly the right answer. But man, it really is just asking those questions and being curious. And one of the things I've struggled with, and I'm sure other people struggle with, both in relationship with other people and for themselves, is really taking the time to ask those questions and seek to understand. So for that person who like literally can't even imagine what we're talking about right now as like, this isn't practical for investments, what is really that first step to taking the time to really ask those questions and then do it on a consistent basis until they see results?
Well, I want to touch on a few points of something you said, but I think that it starts with just living by the motto of listening to hear, not to fix. Listen to hear, not to fix. Too often, we're listening to try to find a way to fix or to prove our point. And that's still fixing, right? We want to fix their view of something. So we're constantly thinking about, well, what information can I share with them to do that? And I would just challenge everybody just to truthfully just have a conversation, just to listen, no intention of where you want to take the conversation, and just let your curiosity from what they say lead the conversation somewhere. And just go. And just whatever they say, you know you're going to ask a question, but in order to be able to ask a really good question, you have to be intentional and intently listen to them and not have this like going on in your head, this other part of your brain being like, all right, well, they're saying this, like, should I tie them up to this? Like, you've got to just go and just listen to hear and not to fix. And I think, there are all these studies out there about how we haven't saved enough in retirement, or people have money and they're still not happy. And, they're wondering why they never, I was reading this Morgan Housel quote the other day, and it's about basically like, everybody sets a benchmark. I want to get to $1 million saved. And once they get to $1 million, they're not happy. They're not any happier. They're at $1 million, then they're like, I want to get to 3 million. And you do that your whole life. And then you retire. You're like, gosh, once I get to retirement, I want to be able to stop worrying and have all this anxiety about money. But then when they've been doing this for 40 years, that they can't just stop. They constantly now have anxiety and worry about money continuously, forever. And so, and we haven't saved enough as a country, and we don't know what, and we always are wondering why, and we're always after these like quick fixes. Investing is a necessary thing. Everybody should, in my mind, invest. I think that everybody that it's proven that it works if you stay consistent to it. And more people have had access to investing than ever before. From broker dealer days back in the early 1900s where you had to be wealthy to just be served, to now you can open up an account in 5 minutes online and fund it and buy a stock like within 10 minutes. And it can be, and it doesn't matter how much you have. You can buy fractional shares. You don't even need to buy a whole share of that $100 stock that went and had a split to 10 and we were dealing with earlier, right? Yet the wealth effect is just gone because the separation of wealth has grown, right? But more and more people are still struggling with retirement. And I'm like, why? And so to answer the question of why this is, if for anybody that doesn't think that psychology doesn't have an impact on investing, I will challenge that tooth and nail in a very collaborative way. I'll hear you. I won't try to fix you, but I'll help you understand how psychology is a driver. Why, with all of the more access, the ability and everything of that nature, more money, people are earning more money than they have. Why are we not better off with retirement savings? There's some other variable in there, and it's psychology. And knowing and understanding psychology will makes people better investors because it keeps them cognizant of their own biases so that they make more rational decisions than they would if they were not aware of it or understanding of it.
Yeah. Yeah, no, absolutely. I think I can't argue that point. I think psychology is a very, very big deal. I think it's very important to, not even just the investing sphere, but understanding basically every human interaction that goes on in the workplace, at school. If you're really young and you're listening to this episode, psychology is the key. And taking time to understand your own psychology, understand people's psychology by, having those traits, having that kind of being curious and listening to hear. Mm-hmm. Now, of course, it is natural for everybody to have that other voice running when they're listening to somebody talk. And so when you say listen to hear, it's something I still struggle with to this day. Like, how do I actually shut my mind off and hear somebody, whether it be my mom, whether it be my dad, my brother, my sister, my friend, my colleague, or my client? Talk to us about that listening to hear. How do we start to quiet our mind and actually hear people?
Yeah, it's hard. Again, that's one of those simple to say. It's a great little catchy line. It gets people, yeah, good. But then to go and act on it, it's hard. And I still struggle with it. I think there's really two, there's a main driver of it. And I think that it helps people understand is that we enter every conversation with a perception and a view and a lens. And, we talk about it in a lot of our leadership training is that you've got to remove your filter when you're talking to others, and it's really hard. But I know it seems simplistic and it may be redundant, but it goes back to awareness. Like, I understand that I'm coming into this conversation. I have this view, whether it's like let's just say it's a difficult conversation or like a conversation with my spouse that we see differently on something. I used to go in and I would argue my point because like I see it this way. Like, how do you not see it this way? And as I became more aware of these issues, these biases that I bring to the table, I now take a breath before I respond. And I say, I have this bias. And I say this to my head. I don't say it to my wife. Well, she hears all about this and she's tired of hearing about it because once you kind of go down this path, it's like it's a never ending spiral. And you see it everywhere in the world and it's unbelievable. And it kind of can be overwhelming. But I remove that filter and I say, that is not what I want to respond because that doesn't create the intention of the outcome that I would like. And so I'm going to actually then ask another question to get more clarification because I was hearing it through that lens. And I'm going to ask, can you just give me some more clarification of what you mean? Tell me a little bit more about what you mean. Because now I heard, I reacted, and I saw I was going through that filter, and I didn't yet have a reaction. So I need some more time to process. As I've identified the filter, I've removed the filter from my head and my mind. And now I ask a question with a clear filter that I can hear it. And they're going to say it again. I'm going to hear it differently. And then now I can have a conversation at that point.
I literally just had a light bulb go off in my head of like time to process never made sense to me. Like, I'm like, did you not just hear what I said? Like, what do you mean you need time to process? But that idea of removing the filters to kind of step back and actually hear what is being said, that makes so much sense to me. And now, Matt, I think we're going to wrap up the show now, but to kind of summarize everything we have talked about, it's really about bringing awareness, acceptance, and vulnerability for the people listening, specifically into your investment portfolio, into your investment life, to understand the why behind what you're doing, why you're investing, and then you'll see how that'll impact you as time goes on, specifically maybe for people listening with anxiety around money. That's kind of my summary. Matt, do you want to add anything? Do you feel like we missed something?
No, I think you nailed it there. To build on that, I would say that investing is not about just the act and the tactical execution of investing into investments. That has become, as we talked about, easier, more accessible, and you can get more information than ever before on that. And it hasn't changed the outcomes. And psychology and awareness and vulnerability, there is this other avenue of well-known Nobel Prize winning researchers that have identified these other areas. And I think that it's a matter of understanding that investing encompasses so much more than just the tactic. And if we can then broaden our exposure and understanding of what all those areas are, we can become truly better investors, because it's not just more information, more accessibility. It's a reframing of where our focus should be to then leverage that information and accessibility better to get better outcomes.
I like that a lot. No, thanks for adding that, because it's not that, yeah, you have your investments over here and then you need to get awareness, get acceptance, and get vulnerability over here to improve your investing. It's that, no, these are like together, and this might be the main thing that you really need to look at, you really need to deal with, so that you can better leverage all the work you've done over here. It kind of reminds me of the metaphor of like a ladder, right? If you have kind of your ability to invest and your ability to analyze, you have the one side of the ladder and you have the rungs. But if your kind of emotional awareness and intelligence isn't fully built out, you can't climb the ladder. And so a lot of people listening, including myself, might need to build out that emotional awareness.
Yep. Agreed. I love that metaphor. That's awesome. Spot on, man.
Well, Matt, thanks so much for coming on the show. And where can people go to find more about you?
Yeah, no, I appreciate that. I'm active on LinkedIn. You can follow me there. I'd love to connect on that side. You can go to mattreiner.com to learn about some of the things that I'm talking about on the podcast and blogs, etc. And then yourwealth.com is our firm, and you can see me there.
Awesome. Perfect. Well, guys, thank you so much for watching. All the ways to contact Matt will be down in the show notes, and we'll see everybody on the next one.